Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar displayed quite a volatile session on Monday after an attempt to break higher ended in a tumble. However, from the close of New York, we can see that we've got an inverted hammer. What the name itself suggests is a single Japanese candlestick pattern or an inverse hammer after a downtrend, which is pretty much what we've seen since 71 cents, is now put a bit of a question to whether we've hit a base, that is around 68.60, also seen as a key level. A break above 69.30 should imply a move to 69.80 as a potential target and reassess from there, as we could be looking further. But it all depends on the dollar index, which measures the greenback strength on a basket of 6 major currencies, has weighed heavily on the Australian dollar since Friday, as the market extends its rally to 108.88. If we see a break and a close of New York above 109 would give some concerns right across the board for many of the currencies. However, still looking ahead, there's plenty of events this week as investors look towards the US Federal Reserve Conference for further clues about possible US rate hikes to cause surge in inflation. The central banks hold its annual meeting at the Jackson Hole, Wyoming, and looking to this Friday, we're waiting to see whether or not Fed Chairman Powell will give us any indication on how the central bank views the next rate hike, which is seen September 21. If so, there could be some pretty much further aggressive movements this coming week and mainly to see on Friday. But all eyes on this support at 68.60. And while intact, as I mentioned, a confirmation to the upside is seen from 69.30 to support this inverted hammer and therefore look towards 69.80 as a potential target. The market overnight crushed the level of 99.5 and now puts further risk to the downside for the euro to somewhere around the region of 96.40.55. Although there is many events coming up this week, the market is still assessing on what the Fed will say on Friday, or Fed Chairman, should I say. With the 2nd of September, we've got the August US job rates. Followed by that, on the September the 13th, we've got the US inflation data. And then on the 21st, we've got the Fed rate decision. So no doubt, Jerome Powell will be looking at many of things as well as the data. And let's see what this year's topic on reassessing constraints on the economic and policy at the Jackson Hole Symposium in Wyoming, and whether or not the market will find further bearishness, only if we do see the fact that euro will tumble further. That is, if we get a break to the US dollar above 109. So keep an eye on that. In the meantime, though, looking towards 98.80 as support. And if the market does see or recognize that we are extremely oversold, like previously back here in early July, then we could get a correction, possibly back towards 101.5. But there is a lot of conflict to that call, as the ADX is trending bearish and the MACD is negative. The dollar yen hit the brakes this morning after challenging the top side of the range around 137.50. We got to a high of 70 and dropped back quite sharply to 137.25. If we have seen the brakes hit at this level, like previously we back here in July, then we could see a pullback towards the 136.30 target and reassess. Sterling has tumbled further and now looks towards this level of 117.20.25. As long as we hold here, I feel that there is a short rebound in the making to 118.5. But a close under New York would give me some concerns that the bearishness may actually continue to 114. But I'd rather sit out underneath 117 because that call is very weak. Nevertheless, it all depends on the US dollar where it closes. And above 109 would be very concerning across the board for many currencies. Looking at gold, well, the market took the challenge lower and briefly touched the region of 1,732. From the current pattern, though, it does feel, or from the way I view it, that the market could actually take it towards 1,722 to 1,700 as a potential target. Although the base is holding around 1,680, I don't want to overstep the call, that is, and take it one step at a time and just be very cautious because we are oversold and the trend is somewhat, although holding to a bear case, it's not as strong as it was back here in June. Nevertheless, the bears are still lurking, and we could see a break of 1,732 with the resistance coming in around 1,758 to 62. Wrapping up with oil, the market took the challenge to the downside and thought better of it. After the rejection at $86 a barrel, has put the market back on course to take the challenge to $92.70.90. Reassess from there in case it extends up towards 94 area. I do like this candle posting into the hammer and therefore could see further strength into the coming session. Well, that wraps it for the day. Thank you very much for joining me, and as always, look out for the interest rate report and I hope you enjoy the coming session.